We're going to talk about how you can retire on a six-figure income, $100,000 a year or more, completely, legally, totally tax-free. How do you do that? All you have to do is understand how your income is taxed in retirement. All right, so this is really important. So there are different types of income in retirement. There are different types of taxes, I guess, that you pay in retirement. So first, we have what we call ordinary income. And that's a kind of income, that's where, like if you have, wages. You know how when you have a job, right, they pay you wages, you pay taxes on that based on whatever your tax bracket is. Pensions, same thing. If you're retired, you have a pension, just like having a job, you're taxed the same way. Oh, how about this one? IRA or 401k or 403b or 457s. Same thing. Every time you take $10,000 out of your IRA, guess what? You owe tax on $10,000. Interest is on this list. Short-term gains and dividends. So short-term capital gains, short-term dividends, or dividends from companies you've held for a short period. Social Security income. And I'm going to put in parentheses 85% max. Social Security is 15%. 15% of what you get is always tax-free, at least in the current tax code. But the question is, well, do you pay tax on some of it or up to 85? So 85% is the highest amount of your Social Security you pay tax on. So said another way, for every $10,000 you get each year in Social Security income, the most of it that's considered taxable is $8,500. This is all like wage type income, and there are some other examples, but I'm just trying to give you an idea of what that is. What's next? Well, how about this one? LTCG. That stands for long-term capital gains. This is when you invest in something like stock, real estate, some type of asset that is held for more than 1 year. Let's say you buy, IBM, and you hold it for more than a year, and then you sell it for a gain, then you pay long-term capital gains tax rates, which are lower than these guys, right? These ordinary income taxes on the far left, they're the most, they're the highest level. Long-term capital gains are less. No IRA money here. You cannot have, if you have money in IRAs or 401ks, that goes over here. This is for non-IRA money in this category, okay? We're coming up to my favorite one. This is my favorite one right here. We also have a tax-free income. This is my favorite income, right? Where do we get tax-free income in retirement? Roth IRAs, anything Roth. Roth IRA, Roth 401k, Roth 403b, all that stuff. Properly designed life insurance is another option. Hey, how about this one? Reverse mortgage. If you get income from a reverse mortgage, that's tax-free. Disability income is tax-free. Oh, any return of principal, right? Return of principal means, let's say you put $100,000 in an investment account. You pull out $20,000 a year. Your investment account doesn't make $20,000 a year of earnings. It makes like maybe 10. The earnings portion, that's over here, ordinary income. But the excess, it's like, hey, I pulled out 20, 5 of it is gain, the other 15, that's over here. How do you have $100,000 a year of income, right, in retirement, legally, completely tax-free? How do you do it? You want to have as much money as possible here, obviously. You want to have little money here, as little as possible. As much as you can over here, and I'll put limited income here. And if you do this the right way, you get a bunch of income coming from the tax-free bucket, right? That's good. You don't pay tax on that. And if a bunch of money's come from the tax-free bucket, guess what? Your Social Security ends up getting moved over here because Social Security, the way it works, the more ordinary income you have, the more tax you pay on your Social Security. But the more tax-free income you have, guess what? That's when Social Security starts to be tax-free. Again, if you do it right. You can then have certain amounts of long-term gains, maybe as much as, $50,000 or something of gain. It's also considered tax-free. I think right now the highest number I have is I have a client. They are getting $20,000 a month, $240,000 per year of income in retirement. And guess what their tax bill is every year? A big, fat zero, which is awesome. And guess what? The way they're positioned, that's their deal for the rest of their lives. Now, yeah, you got to have enough money saved to support that kind of income. But the key is, do you have your money in the right places? And your goal should be right here. How do we get as much of our money as possible in this tax-free category? Because I promise you, when you get to retirement, and if you're already there, you know what I'm talking about, you're really going to appreciate it. So there you go. It's a little secret of the financial trade, retirement planning secret, if you will. Hope you enjoyed it. We'll see you again on our next video.